Okay, so next year, 2025, really important year because it's a year where we anticipate the market to move higher. And you may think, well, how can the market move any higher than it already has? But it can, and I believe that it will. Now, my belief doesn't really mean anything, right? The market can still go down, and I can be wrong. So we have to put some type of rules, we have to put some type of understanding to use as far as why we would go long and where do we go long and how do we take advantage of these moves if they do in fact make the market go higher. So one of the methods that I've been teaching for a very long time. So every year we typically do what's called the forecast for the next year, what to expect. We work with a lot of traders, and you can use this on the Dow Jones, you can use this on the NASDAQ, on the E-mini, you can use this on stocks, on currencies as well. I would focus more on the financials as opposed to the currencies and what I'm about to show you. Typically, what we have is an understanding that the first month of the year, which is January, is a good indication of what's to come, what will be ahead of us throughout the year. And there's a lot of professional traders, hedge funds, money managers that look at the same thing. So every year I do this for the past 10, 15, 20 years. I've been teaching this, and this is no different. It's going to work the same exact way. What I'm going to do here is add some more data here to the chart. Hopefully we can get some more data on here. And I'm going to show you exactly what to do for the upcoming year and to take advantage of it. And I'll do maybe a year or 2 or 3 years. So you can see here that this is December 1st to January. This is actually 2022. Let me go to 2024. We'll go work our way backwards here. Okay, so this is 2024. The beginning would be here in January. Right here. Okay, so this is 2024 right here, first trading day of the year, and market started to go down, right? Started to go down, down, down. And then what happened as we get into February here, the market miraculously moved higher. So on February 1st here, we see that the market started off here and ended here. So we could consider that an up month, a higher close than open, if you're looking at a monthly chart. And we can say that January was a positive bullish month. Would everybody agree with that? Right? Pretty straightforward. If anyone sees something different, please let me know and I'll take a look at it. But for all intent purposes, very simply, the market went up. Now, as we move forward, and it's not just the little guys, but it's also traders and money managers and investors that are holding on to a larger position for the year because they all are interested in what happens 12 months down the line. They have to perform. They want to take this data here into consideration and really expect the market to, at this point, go higher. Now, we can't just buy the market unless you have unlimited funds because the market could go down first before it goes up. So there's a few ways that we could take advantage of this opportunity that tells me since January was a higher close than open and bullish month, the rest of the year will typically continue to move higher. But where we enter is really important. So I'm going to show you 2 methods of going long throughout the year. It could be a swing trade. It could be day trading. It could be taking advantage of large moves as soon as it crosses these specific points that I'm going to show you. So what I want to do is first identify the highest high that occurred in January and wait until it breaks that highest high. Now in this case, it just so happens to be either February 1st or January 30th. right over here. So regardless, this very next candle broke the highs in January. Everybody see that? Now at this point, typically when we have the market making new highs and breaking previous highs, there's usually a pop, an expansion, and an explosion that happens typically. So a lot of people think about double tops and double bottoms, right? You probably heard those scenarios. But as soon as the market breaks and doesn't just give you a double top or testing the highs, for example, this clearly went higher. This is an opportunity to be a buyer. So very simply, moving forward, when the market breaks the high of the previous month, it's an opportunity to be a buyer. That's one way to do it. Now, whether you do it as a day trader, whether you're using the Atlas line or the trade scalper or the Sonic system or the autopilot, any of the methods that you have on your own, it's a very straightforward idea. Probably I would say to you a point or two above this high would be a stop. You'd use a stop or a stop with limit. Now, once you enter long into the market, there has to be an area where you would have a stop. Now, the stop could be variable. It could be below the most recent swing. It could be below this candle, the actual candle that broke the high. It could be back here. We're going to just keep it simple. As a day trader, because this broke, I'm going to look for the next few days only to go long, get in, get out, maybe 10 points, and be finished with it. Now, how far did the market go? How many days? Typically, there's a cycle of 3, 4 days, 5 days in a row. This is 106 points. Now, by no means am I saying for you to take 100 points or 106 points. That's not at all what I'm saying. What I'm saying is because the market broke that high, and I'm expecting it to go higher, you have the opportunity to take 10 points at least throughout the day within the next 3 to 4 or 5 days. And you can use any method, either our methods that we teach and we offer at Day Trade to Win, or you can do it on your own. But this would be an opportunity. At least have a stop and a target in place. Whatever type of trading that you do, make sure it's rule-based. Okay? Anyone have any questions so far? All right, maybe Jem, Zach, Joanna, Michelle, Jackie. All right, so that's one way to play it. Now, you can see that at some point, the market stopped, did not move any higher. And what happened? The market came down and then broke it and went higher. Again, a grouping of 3, 4, 5 days in a row for the market to go long. So you have these opportunities to go long on using the Atlas line or the trade scalp or the Sonic. As a matter of fact, there are, in the software that we provide, I purposely included, just to give you an example here, I purposely included an option to only use long trades or only use short trades. So let's take a look here. For example, you have here alert 1 and alert 2. This allows you to turn on or turn off specific signals in directions as well. So this is really important. This is just for the Sonic. If you're looking at something like the autopilot, it's the same thing. So on the autopilot, which happens to be a strategy here, you have the option to only buy by checking that box or only sell. So, you know, you've incorporated this idea that if you're thinking about only going long, focus on only going long and unchecking the sell order and only focusing on buy orders. And that way, every time the market moves higher or breaks or gives you that signal, you're not going against this overall move. Does that make sense to everyone? So we're focusing only on long trades when this occurs. The market stopped here and did not go higher for a very long time. And then it did. So in this scenario, after it breaks 2 or 3 points, now you have an opportunity to go long on this day, on this day, on this day, on this day. This day was a sell-off. Made a new high, same thing. Made a new high, same thing. Made a new high. Now we wait. And we wait, and we wait until here. This is September 2024. Made a new high, came down, broke, made a new high, and so on. So you can see that this is 2024. If I went back to 2023, 2022, 2021, you're going to see the exact same scenario occur. And the only reason why I'm doing this is because in January, this gave us the forecast that said, since this is a higher close than open, the month was a bullish month, we're going to expect the market to continually move higher throughout the year. But we have to be very careful when we do it and how we do it. That's method number 1. Does anyone have any questions on this? Very simple. It's not rocket science. It's based on price action. The second way we can do this is a little different. I think most charting platforms have a tool that where you could do 50%. The tool that I'm using is the Fibonacci retracements, but I'm not using Fibonacci values. I'm only using this tool to allow me to see 50%. Now on NinjaTrader, you would come here to the drawing tools and we'd come here to Fibonacci retracements. I'm using the shortcut. I'm familiar with the shortcut F8, and it creates the tool. Now, in order to change these settings, we come here to the properties of the drawing tool. You double click on it so it's activated, and you come here to levels where it says 7 price levels. And what I did was I unchecked the values, the Fibonacci values that I wasn't interested in. So I'm not interested in the 23, so it's not checked, or the 38, but I am interested in the 50, and I'm interested in the 100. So only 100, 50, and 0. Now after you've changed that, so we are only seeing these 3 options, you have to come here to template, save, and then save as default, or give it a different name for a template. I just do save as default because I don't use Fibonacci's, and therefore the next time I use the shortcut or I bring up this tool, it's always 50%, and that's what I'm using. Anyone have any questions on that? Now I believe TradingView has the same thing. If you're using a different charting platform, you should also find something that will offer you this same idea of 50%. Because what I'm doing with this now, unlike the previous method that I showed you, where when it broke, I'm not going long, or you could, but another way to play it is wait for a minimum 3 days of reversal, at least. Okay? Now, it has to be a significant type of pullback. When I see this, this isn't really a pullback. This is just the market went down 1 or 2 days, really 2 days, and then it went sideways, and then it went up. So this isn't what I'm really even considering as far as a reversal of 3 days. This over here could be more of a 3 or 4 day reversal, but really what I'm after is more something like this. You see this here? How I went down? This is clearly a retracement, a reversal, a pullback, however you want to interpret it. The market made a high and at some point came back down, right? We've seen that with Bitcoin throughout the years. Same thing. What I want to do is I want to add this here. Wherever it stops, so it Came to here, came to here, came to here, came to here, and it stopped. Everybody see that? Anyone have any questions? When the market closes above the 50%, that's your opportunity now to go long, and this is your target. Remember, markets love to test where they've been. So the idea of it trying to get back up to the highs as if it's going to be a double top is in your favor. So instead of me taking a breakout every time it makes a new high, I'm waiting for the market to retrace heavily, at least 3-4 days pullback retracement, add this 50% marker, and then when it returns back up, now you're only going to focus on going long. You can do an option, which I'm not really a big options trader. You can do a micro, you can do an E-mini, you can do NASDAQ. So whatever chart you're looking at, once it closes, you're long. You can do it during a day, so this could be a day trade, this could be a day trade, this could be a day trade, this could be a day trade. You can day trade this only to the long side until it hits the high. Or you can just hold on to it like a swing trade. As we move to the next opportunity, you can see that the market made a new high, and then 1, 2, 3, 4, that's all we need. 3 to 4 days that are retracing, pulling back, reversing. What do? Here's the high. Once the market closes above this candle or this candle, I'm long. Maybe even this candle here, but you have plenty of opportunities here. I'm long. And what happened? The market wants to test the previous high. Same thing is true. Let me see if I can find a really good example. This here, I'm not really sure if I would call this a significant pullback or retracement. It's not really, I wouldn't really call that. I'd call that kind of a range, right? But this here is huge. Huge move. Once the market closes, I'm long. And you see that it's just a continuation of it wanting to go higher. And you're out. Okay. And the same thing is true even here, right? Market went down. And then I place my little tool here. And in this case, if you're looking for a candle to close back above, this just went straight up, right? So you didn't really have a chance. One day just went, I don't even know how big this day is. Huge day. 128 point day, right? So it's I think it's a crazy phenomena. All right, and the same thing is true here, right? You see, every single opportunity that existed. Now we're at the end of the year. I don't expect another retracement or pullback, but I do expect now moving forward, January 2025, look for it to be a closing higher than open. If it is, which I'm expecting it is, then you have these opportunities. And yeah, I do have a couple of questions here there that are asking, can you do both? You can do both. If you want to do both, meaning take a long on the breakout as well as this opportunity of a retracement 50% and then coming back to test the highs. You can do them both, but always have some type of rule base. Whatever it happens to be, have a stop as well. Don't over leverage yourself. Now, as we, I'm showing you 2024, but let me just go back to 2023 and do the same exact thing. So this is 2023. We have higher close and open for sure, right? Actually, it's here. So the month of January 2023, huge move up. What does that mean? When the market starts to break the new highs, you have an opportunity to go long. When the market retraces and then comes back, you're long, testing those highs. which it did. Anybody can do this, right? You don't need any special software. Anybody can do this. Here is another. So it broke the high. We have a pop. Here is another retracement. What do? We do this. It broke the highs. There you go. And away we went. Made a new high. Pulled back. This is actually, I would have to say this is interesting because we did have a closing price. The market went up a little bit and then came back down. So don't let this be a huge loss. If you're holding on to this, it starts to go back down. Get out of the trade. You don't have to hold on to it. Every single situation that we've seen, once it breaks, it just keeps on going. If you have 1 day, 2 days, 3 days, it's not making new highs, higher highs, lower highs, get out of the trade. Finally, it made a huge move to the downside, and then 271 points to the upside. It's an unbelievable amount of money that could be made there. 271 points. So that's 2023. If you want to go back to 2022, you're going to see it's the same thing. So this is 3 years now. Let's see here. 2023, 2022 is right here. So this here was a lower close than open. See that? Here is January 1st, February 1st. Market went down. There's no effect and really any understanding that the market wants to go higher. So we're not going to do what I just showed you in 2022 because it doesn't give us the same results. It's not even the opposite where you could say since January was a sell-off, does that mean the market's going to go down throughout the year? And the answer is no. So I can't do in 2022 and expect the market to go higher throughout the year. Let's go back to 2021. Here's the entry. Here is more or less the market is even or even going a little bit higher. More or less, it's not really that much, it's just a little bit. Here is opened here, January 4th. Yeah, January 4th. Just barely. Let me open that up so everybody could see. Still a higher close than open for January 2021. You can go back in your charts and verify. And that means that every time the market breaks the high, what do we have? A pop. When the market retraces, what do we have? A return to test the highs. A return to test the highs. A pop once it breaks and makes new highs. Once again. Once again. Once again. And so on, right? Once again. So I want everyone to be able to take advantage of this idea of letting January really take effect, let it move up, move down, and then we can say, and I'm expecting January to be a much higher close than open, which will lead me to be a buyer this coming 2025. And this is exactly what I'm going to do. Take these opportunities, and whether you're using any of our software or your own software, this will be a great opportunity for you to really take advantage of. Does anyone have any questions for me? Now, I like a 1-minute chart. It's my preference. For the Sonic, that's right, Michael. If you trade second chart. So what do you trade, Michael? 30-second chart? So let me just add the 30-second chart and take a look. here. This is a 30-second chart. This is for Michael, who's asking about the Sonic on a second chart. And I'll just add it back, and you can see what it looks like. And that's what you're using. Okay, so let's take a look here. This is a quick way to find whatever indicator that you want. Is you click on an indicator and then you choose on your keyboard the letter, because this is in alphabetical order. So what I do to find the day trade to win indicators is I just click on something and I click the D's for day trade to win, and then whether it's the blueprint or the multiple-lines, they're all here in alphabetical order. So the Sonic, and I'll just click OK, just leave it defaulted. Settings, not really going to mess with it. And so this is on a second chart, Michael. That's what you use, right? 30-second chart. That's a 30-second chart. Long, 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 and short, short, long, long. Where are we at right now? So this is a little bit after hours, where I would consider the market really slow. And I'm not sure if I would recommend you trading a second chart, or maybe even trading after hours. Let the market speed up a little bit. Maybe the Asian session, or the London session, if that's what you choose, or the U.S. session, right? Okay, you got it, Michael. You're welcome. Anyone else have any questions? All right, Carl, David, James, Jay, Peter, Ravi, Sally, Zach, guest 1, guest 2, Annabelle, Costanza. All right, very good. So this is a 30-second chart. I'll just put it back to a 1-minute chart, which is my preference, a 1-minute chart. If anyone has any questions on our software, you can visit daytradetowin.com. You can email us directly. And don't forget, if you are going to purchase, save some money and use the code CYBER20 at checkout. It'll save you 20%. That's really an opportunity for you to jump on board, whether it be with mentorship or with the Sonic only or the roadmap. That'll save you some money. Fantastic. All right, good. We have some traders here in the room as well that are mentorship students as well as Sonic users. Good to see you guys. We have a member class every day. That's right. So with the Sonic or with the roadmap or with really any of our programs, we provide a daily trading room. You can listen in, you can join in, you can take the trades, you can ask questions. It's really a good way to follow along if you want to understand what we're doing with the software and the opportunities that exist. And then on Fridays, it's just training. So that's an opportunity at that point. All right, you got it, guys. All right, everyone. My hour is up. If you do have any questions, please send us an email directly. Hopefully you can take advantage of what I just showed you for 2025. I'll do a follow-up video as we get closer to 2025 as well, or follow-up webinar. A lot of traders want to understand how to trade price action, and I'd like to teach them how to do that. All right, guys, stay safe out there, and I will see everyone at the next class. Take care now. Bye-bye. Want to learn more? Visit daytradetowin.com and get started with a free member account, which includes access to our trials, including the ABC software. Start learning the right way by using price action and avoid using conventional indicators. We offer unique strategies and proprietary software, including the Sonic system. Join Accelerated Mentorship and get instant access to all our software. Let's get you set up in the next training.